Hello everyone, and we had our first video in the morning and I thought that would be it, but we decided also, let me take a time to share our view in the US dollar index. There's a lot of talk in the markets. You have the US versus China trade talks. You have how Lyft, Uber, they failed investors during their IPO. You have on the other hand who's trying to pick the bottom in Tesla. So there are different views, right? Now, no one is talking about the upcoming US dollar pullback, which can be a great opportunity for everyone looking to buy euros, Great British pound, even though you have Boris Johnson as the next prime minister. So everyone is looking at these currencies. But last week, we presented our idea based on Osiris Ragnarok, why we needed to go long the New Zealand dollar versus the US dollar. Now this week also, just this morning, we published our analysis on the US dollar Canadian. Traders, investors, they have been really debating if it's worth it or not anymore to buy Canadian dollars. Of course it's worth it. Now, what we said this morning and we're putting during this video is about the repricing. So there's no interest in buying other currencies. But the US dollar, as it is right now, we'll see these on our charts, it's about plus 10% overvalued. And we're going to look into what happened in the past and see how we can measure this. We'll also take a look at price rotation. What is the price rotation of the dollar index, where it will go, where probable will take place in the next few weeks based on the rotation and how low it may go before the last big punch, where we will see sometime building up into summer 2020 the US dollar index trading above 100. And this will translate into the end, at least in the very short term, for currencies like the Great British pound that can be trading at new lows way below 124 or 115. And also you will have the euro dollar for the first time seriously threatening below parity. Once again, my name is Jose Ricardo Tejaen. I'm the editor of the Prosperity Digest newsletter and also product specialist at Market Shares Daily. The purpose of all of the videos is for education only. That's the only purpose, but we understand that you're keen to look for ideas to feed your trading, and therefore we don't mind that you use our ideas. Just make sure that you measure your risk. Now, please remember that past performance does not constitute future performance. Having said that, let's jump to the charts. Now, we're going to take a look real quick at different publications that we had during the year in Bloomberg. Now, the first one, it's this bet that we have from Goldman Sachs, and this is what back in January. Now, I have to update my subscription, but Goldman Sachs was short the US dollar index all the way to 93, estimating 93 with a stop loss at 97.50. That didn't work out well for them. Now, there are other short selling ideas. This guy, for example, it's about market crash. But what we need to understand, if the dollar, in fact, is about to make a healthy pullback, I'm talking about healthy pullback below 95, which will bring to the table how other currencies will rise. Example, the euro that has been beat up for the last 3 months. And there are other arguments about the complexity of going short the US dollar. Now, you don't really need to go short the dollar index, DXY. What you have to do then is, this is the game where you have to find what's the strongest currency out there. We picked last week the New Zealand dollar based on our multi-currency algorithm known as Osiris Ragnarok, which actually entered one of its first level at 69.43, and we picked the bottom in one of our positions as 68.80. Of course, again, we had the opportunity to go lower. It's not a problem because we had an advantage over the algorithm of about 60 pips, which was an advantage that we play with, reducing our drawdown. Now, what is taking place is understanding exactly the complexity, the pricing of shorting the US dollar index, and how playing with other currencies against mainly US pairs you have the opportunity to take home not only a few pips, but a decent amount of profits based on the length of these, the duration length of this trade. We're already 1 week into the trade. We're expecting 11 more weeks to go. We have discussed this. We posted this in our Twitter account. I think it's fair enough to share with you what exactly we did that. We did back in May 14. We don't have the greatest name on Twitter, FTD tweet. Pretty simple. That's mine, but I will just go to Market Traders Daily right away. Let's go to our profile and look for, let me just share. Here we go. May 14, we share this, and what I want to do today, it's link this video. You will have at the end of the video the morning recording where we explain the thesis behind going short the US dollar versus the Canadian dollar, and at the end of the first video you will have this video as a link, so you can have those ideas. And tomorrow we'll bring back 2 trade ideas. We'll trade of the week and another seasonality positioning that we want to take in emerging markets. Lots going on, while others are focused on what's the pain, the battle, the tweets from Donald Trump against China, and then you have the leader or the editor of the Global Times in China communicating apparently on behalf of the country. Over here we look for those ideas that no one is paying attention to, but they are ready to take you home with profits. Of course, there's risk implied. You have to calculate that on your own account. Now, it was on May 14, we went into 90 cents. We started May 14, we went short 97.37, 97.40. Market went all the way up, created for a very short period of time, created a new high. What we see is a double top, and this is the chart from that moment, 97.17, 97, like as I mentioned, 97.40 when we entered our short positions. We went down 90 cents into a drawdown, and we didn't sell again. Our stop loss, as you can see, we have established our stop loss at 98.80, and we mentioned Goldman Sachs with their 97.50, and we shared this idea with our colleagues in Australia and Indonesia. Now let's go to the charts via Trading View, and right away let's start with the monthly. We always start with the monthly chart, and using the Hawkeye trend and stops level, let's see at the professional stops. We have them located at 98.45 apparently, and then we have them located around 99.7. That could be 99.14. This is as far as our stop loss. What we're looking at this week is prices need to break below and open below this area around 96. That would be 60 cents in the profit for our shorts, depending if you go ahead and short this directly. The DXY US dollar index, that can be leading into probably 80 cents on risk if you determine that. Of course, now on the heat map to determine momentum, we're looking at these 2 bars of green. This we expect in the next 2 weeks to start changing, popping up a new red, and that's our assessment as far as where to locate our stop losses. As I mentioned, our stop loss, we have it according to this 90.07, 99.14. We set our stop loss around 98.8 for this short. Moving into the daily chart. Now, when you look at this, we also want to know what are the targets that we're going to take as short sellers, or if you're still in a buy, how deep, how low this can go. At first, as I said, 97.45. If it breaks right away, another level that we have, thank you to Hawkeye trend and stops indicator, we're looking at the 96 level, and after that, then we're looking at 95.15, 95.10. That's on the weekly chart. We're looking at this on the weekly chart. And after breaking down this level is when things get very interesting. Now, let's go back to the monthly chart and talk about a little bit of price rotation. See, we have it probably on the weekly. Looks much better. This is what we have to considerate. Now, so did we have this level? And we can see some back in June last year. almost the same time. We're looking at potential price rotation of the US dollar index. Now the price rotation is just basically discussing levels that we consider are key rotation as far as resistance and support. They go not only for a 4-hour or daily chart. This is more complex. It goes all the way to historical levels, and this is really the magic of the price rotation. You need to establish, and what we're going to do is, if prices, this is the definitive breakout of all these prices, and you can see probably this level. Let me see if we have the same. Let's go back a little bit more. You can have it all this way. Say probably this resistance in July 2 years ago. You have it here in this area, and then the upside, the upper band. Just remove this. The upper band combined with this support that now is resistance, and there you go. Now this will be your, in fact, your price rotation. This level in July behaved as your historical resistance. You see a couple times, went up, crashed again, and finally prices stabilized above this range, which is right now a bullish price rotation area. Now prices can, let me just turn this around, bring it back, and prices now looking at this double top in the short term, short, medium term, can go back all the way, and we're looking at least $3 to the downside, potentially going back at 95.36. And if you look at the stops where they're located, they're not too far from this price rotation that in fact you can easily find on the charts. Now if this is the case, finally prices break below, remember they will break below, that's what we expect as short sellers, break below this 95.34 level, then we go into a new rotation. Now this rotation, we just have to take the level discussed. Let me see if I can take this. That will be another $3. Let me bring down the volume. Look, another $3 from the historical level. And now we have this $3, bringing down the price all the way as a target for short sellers to 92.36. This is why we have we gave this title to this video, the upcoming pullback in the US dollar that no one talks about. No one talks about this opportunity because everyone is focused on ongoing dilemmas. Brexit, you have again US China trade wars, trade talks, if they're not happening, Twitter's here, Twitter's there, and no one is focused on what really matters, an opportunity finally to see a break. Now this will translate not only in opportunities, for example, first pick between the euro and the pound will be the euro because of the recent resignation of Theresa May. Then other opportunities, the New Zealand, again, we have discussed why this happened. We'll have a card in this video on the minute 15 where you can see more about how via our multi-currency algorithm known as Osiris, we went long last week at 68.80. It was a great thing. We picked the bottom in the New Zealand against US dollar, and how we prepare for this, and also how we back on May 14, as we explain on our Twitter. We share with a few of our colleagues. We went short around 97.40 in the dollar index. Now we go back to the charts and we have that price rotation, we have the levels. Now of course once it breaks, remember, it will test, it can retest to the upside, play a little bit, even go back to 95. As long as it doesn't close and open, prices will continue. It will be a reversal, and then it will continue as we expect in our analysis, and this will be flexibility to the markets. How you can translate this weakness in the US dollar for the next at least 11 weeks is also opportunities to go long the S&P 500 and also the Dow Jones. We already discussed what is our long-term target in the Dow Jones, from now to summer 2020, we're looking at 33,000 to 35,000. And in the short term, we are looking at the S&P 500 to retest the highs, break new highs, and with other colleagues, we can easily see 3,050, 3,100 in the S&P 500. And this also will be propel this interest in going equities will be an opportunity based on the weakness in the US dollar that will boost equities, will boost securities. That's an opportunity that will come from this trade idea. Now, of course, you have to measure your risk. So as we mentioned at the beginning, thanks to Hawkeye trend stops leading indicator, we know that most of the stops are located in this level, looking at the monthly chart, the 98.47, and subsequently at 99.07, 99.15. That's for the US dollar, and our stops for our view in the next that we start last week, 12 weeks duration, is 98.80. Of course, this is something that it can always goes wrong, and we will in fact exit if there's a pullback and continuation to the upside for the US dollar index. So this is exactly how we think it will play. You have the different levels, you have the price rotation as we have explained, we have the historical levels that you can see in the charts. There's one more thing that we want to look at and give us an idea as far as long-term indicatives or what exactly happens when you're trading the US dollar index. Now, we have talked, there's taking from the bottom to current high, almost 11-12% appreciation of the US dollar index. One more time, sometime on May 2016, the same pattern, almost 13.14%. And just taking at this previous incident, what we had after that, I'm gonna move this. Let me move the targeting levels. After that, the dollar apparently tends to make new lows. So it moves something similar. Now, if that's the case, I'm just using which we'll take a look at more levels. Take this, and if that's the case, we'll be looking at a new low level eventually around 87, back to 87, because it will be breaking a 2000 all the way from September, August 2014. This is what we have, so we will be making new lows. We don't think that will happen right away. This is not the case. The market conditions are different in the global economy. But what we think is going to happen is what we're about to share. Now, moving to the MT4. I'm going to take a look at this visualization that we also published with colleagues in Spain. The idea is this. If the market, in fact, is stopping now, we're looking, as we explained, we have a rotation that go all the way to 92. But if we apply trend Fibonacci from the low to the new high that we know, we're looking at the 50 exponential moving average on the monthly chart at 93.80. This will certainly, we believe, is going to be a massive support for the US dollar. Now, pay attention, because this is where we really have to pay attention. The 38.2 would be the 94.39. This is a level to consider. If we take from low to high, everything, the price action, this will be the projection if finally this pullback in the US dollar index only goes to the 38.2. And we believe that not only it will make an attempt for a third top, but it will break and create new highs in 2019 for the US dollar by the end of 2019, beginning of 2020. Now, the market may go sideways. As we can see here in this area, it actually didn't move much. 97, 94. It wasn't that much, apparently $3. There's a price area regions where the US dollar only goes about $3 from low to high, and it keeps itself in that range. We have it there. You can see it here again, about $4 and change. And unless it goes for the breakout, it just stayed with that range. You have another $4.70, maybe $5, and that's what we want to explain about price rotation. You can see it here. It trades, it goes with the breakout, then finds itself in a new price range, rotation until the next breakout. So what is happening now, let's take an idea, $4.50. Estimate is that we are under the same circumstances. The dollar is preparing for another price rotation within the range and then the breakout. Now that price rotation is not a bullish price rotation. It will be a mid-level price rotation and it will be around this channel. This is where we find that it will be the best opportunity to buy one more time the US dollar. This will translate in going long then the US dollar versus the Canadian dollar, going short the euro versus the US dollar, short Australian dollar versus US dollar, short New Zealand dollar versus US dollar, and absolutely positioning yourself going short against the Great British Pound versus US dollar. But not now. This is the time to align yourself with a potential risk on opportunity on different pairs, different US pairs. And as you can see, this rotation will bring the US dollar below the 96 level, will come into this region and start trading all the way from the 96 all the way to this 93. It can then push lower. This is why we have a second scenario where it will go all the way to the 50% Fibonacci 93.20. And I wouldn't be surprised if it hits 61.8, $92.05 estimated. The real trick is the bullish narrative for the US dollar will not be over. I repeat, the bullish narrative for the US dollar will not be over unless prices break below and open below 92.05, 92.10. This is really then when we will start moving into a bearish rotation. This bearish rotation won't happen. There are certain fundamentals. The US economy is doing well, although everything may normalize or not. You still have a lot of battles with populism in Europe. This story, the rebound in China may not last, and if it lasts, it will benefit Europe, especially the euro. This is something that we have taken from our colleagues in Nordic countries, Martin Ledung and Andreas Steno Larsen from the investment bank Nordea Markets. Now, these are our two levels. This is where we expect in the next 11 weeks to take place. Then a sideways price action within this mid-level price rotation, and then expecting moving into the end, the very end, and the beginning of and going to the middle of 2020. We expect the dollar to make a strong comeback, breaking current highs in 2019. 98.37, and moving for the first time since we have 2016, and we have this area since December 2012. This area will be once again to the upside, a target for the US dollar, and we will see the dollar once again making a move into the higher band of a price rotation, moving between 150 all the way to our conservative target 103, and why not making a final top at 104.30. So there you go. This is a trade that no one talks about, or they were wasting their time. There's a pullback coming, upcoming pullback. We still have 11 weeks to go in our short-term trade. We are long dollar, New Zealand dollar versus US dollar, and as we described in the video this morning, we have all the levels to go short the US dollar versus the Canadian dollar. If you want to take a look at that trade, please make sure that you subscribe to this video so you keep receiving all this information, and at the end you will have the image, the link to continue into that video. I thank you for watching. Again, Jose Ricardo Tejaen, editor of the Prosperity Digest newsletter and product specialist at Market Traders Daily. Wishing you a happy Sunday wherever you are and a great beginning for your trading week. Thank you.